Yeah.
General Electric is a US industrial power, healthcare and financial conglomerate. It has a market cap $242.2 billion, PE ratio 25.4, dividend yield of 3.5%.
Most interesting thing about them, I think people know the company and know the assets, is they've just been through a CEO change. An internal appointment, a guy called John Flannery, who's been appointed to replace Jeff Immelt, and he comes from the sort of healthcare division, which is the one that makes the scanners and all that stuff.
And Jeff Immelt was out here earlier this year. In fact, we had the opportunity to have him on CNBC Africa.
Yeah, look, I've learned over the years, whenever you open up a set of financial accounts or a statement released by the company and you see the word discontinued operations and continuing operations, you just worry.
You run for the hills, or do you just worry?
You worry and you look further into it. This company's had difficult times, had very difficult times. I mean, the whole financial services, the asset financing was a problem. They're very diversified. I mean, they're into power generation, renewables, healthcare, aviation, transport. So it's a massive company, extremely well diversified. The order book looks good, but the financial results are not that hot, eh?
Have they managed to transform themselves to keep abreast of digital trends?
I think so. They put a lot of work into exactly that, interconnected devices in the power space and so on. But look, prior to Immelt was Jack Welch, who kind of was the alpha CEO of his time. But what he really did was he accumulated lots of financial assets and then used that to smooth the earnings. So it looked a little bit better than it really was. And
so
the financial assets, I mean,
they
would lend money to customers buying their power stations or their trains or their aircraft engines in particular.
That's fine in good times, unless you find customers defaulting.
In 0809, it all just hit a wall. And so they radically downscaled the financial side of the business, which has created a lot more earnings volatility, which made Jeff Immelt sometimes a little bit less popular than he probably deserved to be. I don't know what's going to happen to this group. It's possible that they may do further unbundlings. The medical devices business alone, I think, would be a lot more valuable if it wasn't hidden away in this company structure.
Well, we know how much you like medical devices.
Yeah,
as I say, he's
scanners,
planning
all
for
that
new hits
expensive
down the line from what he's running.
It's relatively small in their operations. I mean, a turnover, it's probably half the size of the power and the aviation division. But clearly this is a growing division. Look, this is a full-size industrial manufacturing monster.
Let's have a look at the share price graph.
Sort of tails off. It's done less well than the overall market, which, as you know, has done a real gallop in 2016,
and that's not what you want from a diversified industrial holding company, effectively. I suppose this is the quintessential diversified industrial company.
Yeah, and it's a manufacturer.
And it's heavily geared to cycles in fixed capital investment. If you know, globally power is rising and aircraft engine spending, and the picture for that stuff at the moment is not awful. It's just a little bit mixed.
But emerging markets are also taking strain, and a lot of their power generation
into that
projects will be into that space.
They've got just two quite recent big power projects, I think, in India. So they've got orders, but 25 PE.
Hot, not hot.
Not hot.
Paul?
Yeah, I'm going to go with not hot as well. I think Flannery has a lot on his plate, and I think the market would have preferred an external appointee as a CEO to be a little bit more
objective,
a little bit more inclined to shake the cage a little bit.
So we are going not hot on G.